Most Australians treat credit cards as a way to spend money they don't have. But in 2026, with inflation and the rising cost of travel, that is a recipe for financial disaster. However, if you understand the strategic frame, a credit card isn't a debt tool, it's a high-yield asset. Today, we are doing a 5-minute deep dive. We aren't just looking at the best 5 cards, we're breaking down the math of the Australian interchange system, the earn rate collapse of 2025, and how to fly business class for the price of a coffee. If you want to stop being a donor to the big 4 banks and start being a collector, this hour is for you. Before we rank the cards, you must understand the profit gap. In 2026, most standard rewards cards are a scam. If you pay a $150 annual fee but only earn $100 worth of points, you are losing. We look for cards where the sign-up bonus, usually between 60,000 to 150,000 points, creates a net profit of at least $1,000 in travel value in the first year. We're going to discuss the cents per point rule. If you aren't getting at least 2 cents of value per point, you're playing the game wrong. Rank number 5 is for the person currently in the interest trap. You cannot play the points game if you have a balance. If you are carrying $5,000 in debt at 20% interest, you are losing $1,000 a year. This card is your surgery tool. With 0% balance transfers for up to 26 months, you stop the bleeding. This is the most profitable move for anyone currently paying interest. We call this financial ground zero. Rank number 4 is the entry point. Many people fear annual fees, and rightfully so. In 2026, the best no-fee cards still offer basic travel insurance and a modest earn rate of 0.75 points per dollar. This is for the person who wants the protection and free points without the stress of managing a high-tier account. It's the set-and-forget strategy. Rank number 3 is the king of Virgin Australia fans. In 2026, this card is unique because it pays for itself instantly. You pay the annual fee, but you get a free domestic return flight and 4 lounge passes. If you fly once a year between Sydney and Perth, the flight alone is worth more than the fee. You are essentially getting a premium points earning machine for free. This is about benefit offsetting. Rank number 2 is for the high earners. This is where we see sign-up bonuses of 120,000 plus points. That is enough to fly to London or Los Angeles. The strategy here is churning. We aren't keeping this card for 10 years. We're capturing the massive bonus, using the 1.25 earn rate for big expenses like insurance or tax, and then reevaluating. This is how you manufacture luxury experiences on a standard budget. The number 1 card in Australia for 2026 wins because it hasn't nerfed its rewards like the big banks. While the big 4 have cut their earn rates due to interchange caps, this card still offers 1.25 Qantas points on almost every dollar. Combine that with a $450 travel credit, it becomes the ultimate tool for anyone spending over $3,000 a month. It is the gold standard for points density. To wrap up this hour, remember the 3 rules. First, if you pay $1 in interest, the bank wins. Second, points devalue like a new car. Spend them, don't hoard them. Third, check your points per dollar every 6 months. In 2026, the banks are hoping you aren't paying attention. Don't forget to subscribe. See you next one.